Volatility expanded, but structure did not move. Price is holding inside higher time frame boundaries. And that is the first condition that defines this environment. Now we begin from the monthly structure, because the monthly time frame defines the outer boundary of all lower time frame behavior. The current monthly candle is still forming, but its position relative to the prior candle already provides structural context. The March candle is contained within the range of the February candle. This is not expansion. This is containment. Price has moved higher from the lower portion of the February candle, but it has not established persistence outside the full range. And persistence is the only condition that creates structural relocation. Without persistence, movement is temporary. Now observe slope. The 20 moving average on the monthly time frame is flat, but slightly tilted downward. This is important, because it shows that higher time frame pressure has not reversed. It has only slowed. Now observe volatility. The 20 Bollinger Bands are expanding slightly, but the expansion is not balanced. The lower band carries a steeper slope than the upper band. This creates asymmetry. And asymmetry means pressure remains directional, but not confirmed. Now observe the 4 Bollinger Bands. The lower band expanded sharply, then began to stabilize. The upper band remains compressed. This tells us that volatility expanded in one direction, but has not transitioned into a stable expansion environment. This is not clean expansion. This is imbalance followed by stabilization. Now observe RSI. It is holding slightly above 40. This is no longer extreme weakness, but it is not strength. This is recovery inside containment. Now this is the key interpretation. Monthly structure is not trending. It is stabilizing inside prior range. And when higher time frame stabilizes, lower time frame becomes reactive. Now we move to the weekly structure, because weekly defines how price behaves inside that monthly boundary. And here the behavior becomes more specific, because the same location is being tested repeatedly. Now we begin to see structural weight forming, not through movement, but through repetition. And repetition is what defines structure over time. If interaction continues at the same region, that region becomes dominant. If interaction shifts away and holds, structure relocates. But here, relocation has not occurred, so the environment remains constrained. If monthly containment persists, weekly movement remains rotational. If persistence begins outside the monthly boundary, weekly structure begins to expand. Until that condition appears, the structure continues to process inside the same range. Execution conditions remain in transition. Now we focus on the weekly structure, because this is where structural behavior becomes visible. And this is where most misinterpretation occurs. The 0.33 level previously acted as a precise structural reference, but now price is no longer holding exactly at that level. It is moving around it, above it, below it, and back again. This is no longer a point. It is a zone. And when a level becomes a zone, precision decreases, and interaction increases. Now observe the broader weekly structure. Since February, price has been rotating around the midpoint of the first February weekly candle. This midpoint acts as a balance center. Price moves above it, then returns, moves below it, then returns again. This is not trend behavior. This is rotational behavior. Now observe containment. Weekly candles remain inside the range of the first February weekly box, and also inside the range of the first March weekly candle. This has now continued for multiple weeks. This is time-based compression, not price-based compression. Time compression reduces directional clarity, because movement occurs without relocation. Now observe moving averages. The 120 moving average is flattening. This indicates loss of long-term trend strength. The 20 moving average is below the 120 and remains below it. This indicates that short-term strength has not translated into higher time frame reversal. Now observe volatility. The 20 Bollinger Bands maintain a downward slope. Both upper and lower bands are aligned downward. This indicates that structural pressure has not reversed. Now observe the 4 Bollinger Bands. They contracted, then began expanding again. This sequence matters, because expansion after contraction creates movement. But that movement does not always produce continuation. Now observe the weekly candle behavior. The upper wick tested the upper boundary of the March weekly box, but price did not hold there. It returned and closed near the midpoint. This is rejection, not acceptance. Acceptance requires persistence. Rejection requires failure to hold. And that is what occurred. Now observe RSI. It is slightly above 30. This shows that downside pressure has slowed, but not reversed. Now combine all of this. Weekly structure is not expanding. It is rotating inside a defined range. And when weekly rotates, daily must be traded differently, not through continuation, but through boundary interaction. If price reaches the upper boundary and fails, rejection continues. If price reaches the lower boundary and stabilizes, rotation continues upward. If price holds beyond either boundary, then structure shifts. Until that happens, movement remains constrained. Execution conditions remain in transition. Now we move to the daily structure, because this is where execution actually occurs, and this is where most mistakes are made. First, we observe containment. Daily candles remain inside the range of the first March daily candle. This means no new structural territory has been created. All movement is still inside prior definition. Now observe position. Price is interacting around the 20 moving average. The 20 moving average is flat, with a slight upward tilt. This indicates stabilization, but not expansion. Now observe volatility. The 20 Bollinger Bands are flat. They are not expanding. They are not strongly contracting. This indicates equilibrium. Now observe the 4 Bollinger Bands. They are expanding, but this expansion is short-lived. Moves extend, then stall. This creates instability, not trend. Now observe RSI. It is near 50. This is neutral, not directional. Now combine this with weekly structure. Weekly is rotating. Daily is stabilizing. This creates a very specific execution environment. Moves appear strong, but they fail quickly. Continuation attempts do not persist. Now define execution conditions clearly. If price approaches the upper boundary and fails to hold, rejection continues. If price approaches the lower boundary and stabilizes, rotation continues upward. If price holds outside either boundary, structure shifts. Now this is the key distinction. You are not trading direction here. You are trading location, because location determines whether distance can form. Now bring all 5 axes together. Time shows overlapping structure across timeframes. Volatility shows expansion followed by stabilization. Position shows equilibrium near moving averages. Pressure shows weakening trend but no reversal. Liquidity shows activation at boundaries. All 5 axes point to the same condition. This is not a trending environment. This is a negotiating environment. And until persistence forms outside the range, execution conditions remain in transition.